Hello, my name is Victor, and I'm sure you can tell by the sound of my voice that I'm struggling a little bit. I meant to have this video out yesterday, but again, it has not been an easy last couple of days. But I want to talk about Meta. They had their earnings, the stock has been tanking, so it's going to be a little bit shorter of a video than my usual stuff, but let's get right into it. Meta announced their earnings this past week, and they are down 17% from their high ever since they gave out those numbers. So, what exactly did they say that Wall Street did not like? Their revenue was up 26% year over year, so that was definitely not the problem. The problem was their bottom line, which was down 83% year over year. Not something that you want to see, not something that Wall Street likes to see for sure. What happened as the money was going down the line, and where did it go? Well, their net income was affected by a one time tax charge, a total of about $17 billion. But again, it's only going to be a single event. So I don't really understand why Wall Street is so short term focused when this is going to be a single time that Meta is going to be having something affect their bottom line. Okay, we're just gonna keep it moving here because I can go all day about Wall Street and how they seem to always miss the forest for the trees. But again, I'm losing my voice here, so let's keep it moving. So let's ask the question: is Meta a sell, buy, or hold after this 17% drop? Well, I did a bit of research over the last couple of days and I found that Meta has a fair PE ratio, that is a trailing PE ratio, by the way, of 28. Their projected PE ratio for next year, 2026, is hovering about 21. You always want to see a PE ratio that is lower going forward because that means that the company is expected to make higher earnings. After I ran some numbers, I went through their annual report, I went through their last couple of quarterly reports, I did a whole bunch of research. I have their revenue projected for the next couple of years here at 16% per year. As far as their net income growth, I am projecting 20% growth per year through 2027. And I want to highlight how conservative I am being with these numbers. I wanted to look at Meta and say, okay, in an absolute worst case scenario, what are we looking at? When I went through their annual report, you can see from 2023 to 2022, revenue grew 16%. They did a lot better in this past year for 2024. Revenue grew 22% on the top line. So I'm going based off of a number that has been improving here for the last at least 4 to 5 quarters when it comes to the top line. And even more conservative is the bottom line projection because net income between 2024 and 2022 on average grew about 64 to 65%. I am only projecting net income growth of 20%. Some people might look at that and say, Victor, you are doing a terrible job of projecting these numbers. But again, I would much rather look at these numbers and expect something on the low end and then be pleasantly surprised when they come in with net income growth of like 40, 50, 60% instead of the inverse of that. I never want to look at a stock and expect some amazing growth only for it to come short and then, I'm holding the bag and I have a stock that is performing terribly because of my expectations. All right, I know my voice is getting a lot worse the more I talk, so let's keep it moving here. Cash flow analysis was next. Meta is investing like crazy. Mark Zuckerberg is looking like a madman to Wall Street because of how much money he is pouring into this AI. I, for one, do not blame him because he is not the only one. On my channel, we have talked about a stock like Amazon, who also is spending like crazy right now. Nvidia cannot get these chips to these big AI companies fast enough, and they know it. Every single company right now wants to make sure that they are not left behind by their competitors, and Meta is no different. The biggest thing that I wanted to see was how well Meta was doing with their operating income, and that is up 26% year over year. So while yes, it is true that Meta has been spending like crazy, but at the very least you can see that they are getting something in return for it. Mark Zuckerberg is not hitting the brakes when it comes to investing for the future. Net cash used for investing purposes was up over 160% in this past quarter. So yes, it's a little bit on the extreme side, but this is Meta we're talking about. They are known as a absolute giant in the world with one of the best balance sheets you can find. Lastly here, what you came here for are my projections for Meta. In my bear case, with a PE ratio of 25, that would still have Meta at $873 by the end of 2027. And again, just as a reminder, Meta right now is hovering a little bit over $600. So that is quite the return in the next couple of years. And that is my bear case. That's not even expecting anything crazy. When I had a look at my bull case, which is again still very conservative in the grand scheme of things, I would have Meta over $1,000 by the end of 2027. That is why, for me, in my opinion, Meta is an absolute buy right now. I am buying the dip, and the numbers, I think, justify it. I'm about to lose my voice here, but I just want to remind everybody, do not listen to some guy on the internet. Always do your own research before going into an investment. As a thank you for all of the research that I did on my end, if you would like to help me out, a like goes a long way towards helping out the channel. Be sure to subscribe if you want to see future videos from me. I'm about to lose my voice. Thank you so much to everybody who made it until this point in the video. And as always, I'll catch you in the next one. Peace.